Okay, this is the first market news coming through from the Nigerian Stock Exchange today. The NSE has suspended 3 companies from the corporate governance index ranking of the NSE. Diamond Bank has been removed according to the Nigerian Stock Exchange, according to the NSE statement. That was in view of the recent governance issues with Diamond Bank PLC. So the index committee decided to remove the bank from the NSE CG index. The second NEM Insurance PLC, which according to the central bank was also been suspended from the corporate governance, and the third relating to Continental Insurance PLC because the insurance company has applied for a formal delisting from the trading or what we call the daily official list of the Nigerian Stock Exchange. The biggest shareholders in Continental Reinsurance is moving to buy all the outstanding shares of Continental Reinsurance, and that is leading to the delisting of Continental Insurance. Well, 3 companies, NEM Insurance is being suspended, and of course Diamond Bank, all ahead of its planned merger with the Access Bank PLC. That's part of the market news just coming through this morning. So what's the liftoff of macroeconomic numbers or data or reports that were carried all into 2019 from 2018, and what's the outlook for the new year? We have what some of these conversations with Adedayo Bakare, who is an investment research analyst from Afrinvest, is joining us from our studios in downtown Lagos at the Nigerian Stock Exchange. Some of the big stories around the macroeconomic environment towards the end of last year was, of course, remember the third quarter GDP reading, which was positive but is still a bit lagging. Then we had the unemployment data moving from 18.8% in the third quarter of 2017 to 25.1% in the third quarter of 2018. Those were the big economic news towards the end of last year. But just as we're wrapping up the year in the final days of Christmas and when you folks were spending some of your time at home, we've got a PMI for November, which shows, or for December, I beg your pardon, which shows that Nigeria's Purchasing Managers Index was better than expected. The central bank data showed 61.1. Reading 50 is the level where your head is above the water. If you sink a point below that, your manufacturing sector. This is the forward-looking economic data. That's what PMI, or Purchasing Managers Index, which is about as a survey of purchasing managers, factory managers, and others within the big and small manufacturing space, including the SMEs. Put all of that together, gives you an idea about the business confidence, about new orders, about inventories, about new hiring, so what you call new employment in the manufacturing sector, and a very critical month-on-month economic indicator for those who are watching the manufacturing space. All of that is part of the conversation Adedayo Bakare is bringing to the table this morning with us from the Stock Exchange, where our studios downtown Lagos. Adedayo, thank you, and we appreciate having you on this first business market day of the new year. We hope you had a very nice holiday. So explain to us some of these economic data, and why do you think they're very critical as we start a brand new year?
Okay, good morning, Bosen. Thanks for having me on the show. The PMI data, it's an indication of economic activity. So it's one of the primary leading indicators that gives us insights into the performance in the economy. Now, for Nigeria, where macroeconomic data releases come a bit later than expected. GDP, for instance, come usually maybe 2 months after a period that is a quarter. The PMI data is useful to understand what has happened over a quarter, since it's released on a monthly basis. Now, in December, what we saw was a general expansion in the PMI, both for manufacturing and non-manufacturing activities. So we saw the index go above about 60 points, about 61.1 for the manufacturing PMI, which any level that is above 50% signifies an expansion in economic activities. Also, the non-manufacturing index also expanded by about 62.3 points, which is also above 50 points, and also this signifies, an expansion in economic activities. Overall, it's an indicator that there is, purchasing managers or business managers are more optimistic, and this is not unusual because, during the festive season, there's usually more economic activities. So it is not unusual to have, a very fast-paced expansion in the PMI in say, November and in December. So it's in line with expectations, and is also, an early indicator that the GDP in Q4 2018 might be a very good outcome.
Yes. So what else, when we talk about a GDP, the PMI numbers, this is basically a survey of big and small, medium enterprises about what is their thinking in terms of inventories, new orders, and what have you. I'm sure some of the companies listed on the stock exchange are also surveyed. Those in the industrial goods and food, beverages, consumer goods, whatever, are part of the survey, as it were. So if you look at the performance of these companies over the last year, do you think this PMI begin to speak to maybe some very gentle recovery in our industrial manufacturing output?
Okay, now I think what needs to be clear is that the PMI index is not, a perfect reflection of what actually goes on in the economy. It's a survey, and it is general survey that captures, it captures almost, all sectors of the economy and activities, in the economy, both in, manufacturing and non-manufacturing activities. But it is not, unusual to see, slight differences. So in terms of comparing, the performance of the index with the, performance of companies listed on the stock exchange, I would say over time, at least since, 2017, since we've seen the recovery in the economy, what we've seen in the improvements we've seen in the PMI has been consistent, with the improvements we've seen in the economy. However, the major difference is why, while the PMI index has expanded very aggressively, the momentum in the economy is still very, very weak. So to an extent, it's reflective of what is happening in the economy and can actually be used as a gauge, to know the general sentiment of how businesses are thinking about the economy, how they are thinking about their businesses, and what they are trying to do in terms of, say, ramping up productions, in terms of sales, in terms of their inventory. So it's a very good gauge of what the economy is doing. However, it is not a perfect measure of economic performance. So for a perfect, a better measure of economic performance, that's why we look to the National Bureau of Statistics to actually give us how GDP data, GDP performed, and that is what we use to actually show how the economy might have improved. But as a leading indicator, it's a very good gauge of performance.
Okay, so what do you think will be the big economic, macroeconomic indicator for investors on Market Street to look out for?
Okay, the big indicator still remains, it depends on the market really, because if you're looking at the normal indicator is GDP, you want to know what is happening, how the economy is performing, how the economy is growing. If the economy is performing, then you expect that businesses are doing well, you expect that businesses are hiring more people, you expect that businesses are spending more, consumers are earning and they're spending more. So all those, the GDP is a very, very important indicator. Also, the inflation data is also an important indicator, because in the end, especially for fixed income investors, you want to see how the CBN is thinking about its monetary policy in the year in 2019. So if you expect that the inflation environment will remain elevated, then you expect that monetary tightening will continue to hold sway in the economy, and that could signify better yields, better returns for fixed income investors. Also, you want to look at how government's budget is going to evolve. What is government's plans for the year? What is the deficit? So, because this way you're able to gauge whether the debt management office will come into the market to raise bonds. If they're raising, if they're supplying more bonds, then investors can have something to look forward to. In 2018, for instance, compared to 2017, we saw a general moderation in the supply of bond from the DMO, and that is one of the reasons why you see that there was less supply in the market this year, in 2018. So in 2019, investors will have to look at both the fiscal space and also the monetary policy space. So basically for us, we think GDP, inflation, and the fiscal plan of the government are very, very important indicators for investors.
Okay, so if I'm looking at inflation and I'm looking at all of that, how does that affect my asset picking, as it were, and not just asset, but the entire portfolio, asset classes that I have to deal with? 2018, if you look back, give us a sense of at least some of the asset classes and how you think economic data or economic reading or performance impacts or help investors decide how to allocate resources.
Okay, obviously it's not even just inflation. You have to also gauge, global sentiment in terms of when you want to think about your investment plans for 2019. So in 2018, for instance, we saw that the general inflation environment was elevated, and while in the first half of the year you saw lower yields. And that was because inflation was moderating, but it was still at double digits, so it was good for investors. But in the second half of the year, when you saw, the political environment shaping up for the 2019 elections, and you saw developments in the external market, investors pulling out funds out of emerging and frontier markets, we saw that the risk was elevated, and CBN had to, ramp up its tightening through OMO issuances. So in 2019, you expect that this will continue. For us, we expect that inflation will remain in double digits because we have, all sorts of, due to improved spending and also food, supply worries in Middle Belt, which has continued for a while. So in terms of that, you expect that the yield environment will remain very tight. Also, when you look at the external economy, you think in terms of the interest rate increases you're seeing in the U.S. and in other advanced economies. And so if this continues, you expect that investors will continue to remain cautious about markets like Nigeria. So also you expect that due to this, the CBN will continue to keep monetary policy tight, and that is good. Also, you want to think in terms of the GDP data. You want to think in terms of are we expecting a very outstanding performance? Yes, we're expecting a very good performance, but we also know that this is not all that will determine it. You have elections coming up, and depending on the winner, the type of policy choices, the type of economic decisions that will be made will also impact economic growth. So for investors in fixed income, it's a bit clearer. But for investors, who are looking into the equities market, they will look to post elections to actually get positive returns on their investment.
Okay, Adedayo, we'll have a bit of a few more minutes of your time after the break to talk a little bit more on this lift of macroeconomics. And of course, this time, we'll try to focus more on monetary policy committee. The first meeting we're expecting about 3 weeks' time. We don't have a calendar yet, but of course, we expect that to be up on the central bank website within the next 24 hours or earlier than that. Give us an idea of on what days in the new year will these meetings be held. Of course, that will be much different from last year, 2018, when we had a bit of a shocker when it comes, a bit of a disorganized MPC meeting because the legislature, the National Assembly, failed to approve or just what you call sign off on those President Buhari's nominees for the MPC members. So all of that has been cleared, politically speaking. And so we expect 2019 to have a normal calendar of MPC meetings. All that we'll discuss a bit later on the program. 2 minutes, we'll be right back with that conversation with Adedayo Bakare from Afrinvest.